The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. Friday, the last day of the week. This is Friday the 11th of January. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until noon Eastern Time. And a great 2 hours. Steve Rhodes kicks us off right here at TFNN. Starts the day, 9 a.m. Eastern Time. Great show. And then a triple great show with Steve being joined by Tom O'Brien and Tom O'Brien being joined by Daryl Martin. Just a fabulous show. And go to the front page of TFN and check out all the specials going on. Check out the live workshops that are going on. Just a slew of things going on. I think a week from yesterday. Yeah, I think a week from last night. Ken Shreve is giving a live webinar. Just oodles of things. Now, let's go straight to the market. Don't forget, I'm followed by Nico DeHaan at noon Eastern Time, and just full program all the way through. Well, let's go to the market. The S&P, I'm showing some charts today. I thought, well, this is what I call Technical Friday, where I show the charts, I show them live, as always, but I also get a little bit into greater detail in terms of what I'm doing based on the ChapmanWave methodology. And of course, most of us have services here, newsletters. I have a daily newsletter. It's called The Opening Call. Very, very comprehensive look at the markets. Patterns that I talk about that are, most of them are unique. Most of them are unique not just to the ChapmanWave methodology, but actually to technical analysis in total. I'll explain that as I move along. Let me just quickly go through these things. This is the 120-minute chart of the E-minis. From the 1382.25 low bar back on, what was that? Back on the 30th of, around about the 30th of, that was the evening, the 30th of December. The market just soared all the way up. It had this huge gap as well. That was the gap of the 2nd of January. So it goes to, in the ChapmanWave methodology, you want to identify the left side low bar, and immediately you want to be able to go to successively higher peaks, and you want to count those peaks. And you want to get to at least a peak D, which is the fourth highest peak. That takes you in a very it's usually a fairly orderly way. If it stops being orderly, you're going to get a failure pattern. So let's just imagine it's orderly and it goes peak A, 1 penny higher than A, goes to leg B, makes a peak, it's called peak B, then a penny above B, it starts leg C up, and that's a floating letter until the bar makes a lower high bar, and that becomes peak C, and so on to D. Well, look what happened. It went all the way to peak D at 1460.50, and then it pulled back. And immediately what I said to both subscribers, because every day I show this 120-minute chart with a daily chart, I show subscribers, and I explain technically what's going on, and I don't put trades on. This is I might at some point do it. I've been asked to do it. You know, I just do so much. I can't add another. It's almost like another newsletter here to have the futures on. So I don't do that. I give the parameters. I show what to look for, whether it's weak or strong, where we are in the ChapmanWave notation, whether to expect higher highs or lower lows. And basically what I said was we're going to be in a rectangle formation. And it became a rectangle formation between a slightly higher high at peak E, 1463 was the high, and 1446 was the trough C low. Troughs on the way down, lowercase letters to show that we're in a declining mode right there. Now look what happens. It goes peak A, B, C, all underneath the previous high. So I call it gray A, gray B, gray C, and then out of the blue, D pops over and it goes to 165, round number, on the 10th. Pulls back, still within the rectangle, basically within the rectangle, and then it suddenly climbs all the way to 1471.50, and now it's pulling back. Basically, this rectangle that you're looking at here, that's think of who's that acrobatic group that I've only seen on TV, and I keep promising I'll go and see them, from Canada. Absolutely fantastic. Very, very commercial, but just unbelievable moves. French name. Anyway, whoever they are, this is like the Cirque du Soleil. Thank you, Tucker and the Den and JC. Oh man, we got a great, the Den, 2 seconds you get an answer. And Cirque du Soleil. And what happens is, they don't have a net, but that's your imaginary cushion right there. So now it says, still in the rectangle formation, about to test what was resistance, that becomes support, and that's right there at the 1463-ish area. We're going to watch that closely. So that's the 120 minutes. The MACD isn't nearly as strong as it was. Stochastic's pulling back. Basically says, yeah, you might have a rally, but you just better be careful because this is a peak E. And peak E's, as you saw from the last one, can pull back. So now let's get rid of that. And we'll go straight to the daily. And the daily says, no matter how I cut it, everything about this says that it's probably leg B in a new buy mode, a buy signal. I'm waiting to get the buy mode, but you did have that oval formation. I'm going to talk about that in a moment. But you've got that huge gap. Now, the story is, of course, the gaps always get filled. I say, yeah, maybe they always get filled, but sometimes you need a space of 3 years, 5 years, 10 years, who knows? Is the gap off the 2000 low on some of these stocks going to be filled? It's already 2012, 3 years for them to go all the way back to that gap. Could take another 2 years or 3 years if they're going to turn around. So it's your nearest gap that you want to be looking at. So this is the nearest gap, and at some point, believe me, this gap will be filled. That's the gap in the futures between 1438 low and the high of the 31st of 1425.75. But it doesn't have to be right now. MACD's these are the technical tools. Look, it says right there, MACD 1226.9. It's green, red, dark gray. And it says stochastic slow, high, low, close, 14.331, 20% and 80%. And right now it's at 91%. That is really strong. That's why I like what I'm seeing here in terms of the indexes. Not all of them, not the Qs, but I like the Dow, I like the S&P, and the IWM, of course, has been leading. So now let's go away from this because Friday we have to wait for 4 o'clock to see where we're going to close. But right now, the futures are saying this is probably leg D up in the weekly chart of the S&P futures, and I don't want to go into the monthly because that has to do with the cash. Now let's go straight to our story, and I'm going to give it to you right now. I don't see it, but let me give you right here. The Dow, right there. Where did it go? Dow, right. No, that's the NDX. There we go. The Dow is at 13,473, up 2.54. It was down earlier. Now, wait a minute. It was down? Let me show you what I give my subscribers every single day. I give them the opening. In the opening call, my daily newsletter, there's an overview section. And what I say is there are 5 quadrants. I don't know what the quadrants, 5 of them, 5 sectors. This one over here is a sector we were looking at. And what I said is there was an oval formation forming. Hopefully this weekend I'll be able to organize and I'll be able to send out to my subscribers the pattern of the ChapmanWave stalk leg formation. And what you see is from 12,883, this is a 120-minute Dow chart, there was a straight line move. Sometimes it's made up of all different peaks, but it's basically, if you look at it, it is a straight up move. Then it stalls, but that stalling motion takes the form of an oval. So this is the leg. This is now the body, the oval body. And the reason why it's called the stalk leg, look at it. There's it. You know how a stalk stands on one leg, and you always wonder, how can it stand on a leg? How can it hold the body, that big body? Of course, the leg would be more in the middle than it is here. But it has that pattern. What you want is to see a break after a certain number of bars. I like to use a lot of bars, more than 13. Usually it's up in the 20 bars. It takes us a 120-minute chart. And then it breaks to the upside. Above, in this case, 13,466. That starts the neck. Well, that neck, whoa, I forgot something there. Let me just double check. 13,446.96, 13,444. Yeah, no, I didn't forget anything. So this is now leg D, as we're looking at, and that's the neck. The neck eventually turns around, makes the head formation. Sometimes the head is just one single bar down, but it stops, makes the head, and then that creates the beak, and that beak can go back into the body of the stalk, or it can go right through underneath And then there's a whole series of things you look for after that. So it's a pattern that I've defined very articulately. And then what happens is unfolding are these waves that just, I don't know how it works. How did the market suddenly get that spike to the upside yesterday to break above to make that pattern? But it doesn't. Look at the dreaded H that becomes an information in the volatility index. Look at this is what I call, this is Richard Arm's Trin indicator. And it's a measure of, it really gauges strength and weakness. But I treat it very differently. I developed over the many, many years that I followed it, a technique that he does not use, as I always do with techniques. I've taken it to a step that suits my particular methodology. And in this particular case, it gave me a signal yesterday, even though the market closed so strongly, it gave me a signal that said, don't get too carried away. There should be weakness early in the morning, and then you will see an attempt at a rally. And that's exactly what we've gotten. It's just a remarkable indicator. It did fail the other day. On that very, very strong day, it failed. It's one of the few times it's got an outright failure in months. Let's say it's the second time in 8 months. That's an amazing. This indicator has a fantastic percentage win. So now look what's happened. I've got this as leg B in the 478, 77. Yeah, 48. 77. This is still leg B. Unless it can take out 13,478, that'll continue leg B. Otherwise, it's going to make a peak B today. And the S&P had a high yesterday of 1472.30, and today is 1472.12. Hasn't yet taken that out. So this could turn out to be a peak B. Let me explain what I'm looking at here. This is really important. What I show my subscribers and go into great detail are patterns that I look at. I drew this a little while back, and it said that 13,588, round about the 14th of January, it could be the 15th, that would be the target if there was a measured move from the left side high, way back here, that doji high on the 18th of October, to the midpoint that I happen to choose on a particular candle, to the right side, and that stops right at... Hey, wait a minute, has it stopped already? No, it hasn't stopped already, surely. No, that should be... Oh, it has. Oh, okay, that stops, in fact, today. But I've got a diagonal channel line that also happens to be what I call the inside wedge, ChapmanWave inside wedge, that goes to round about the 14th to the 15th. Well, we're only 1471. We're only 100 points, 110 points away. Can we do that by Tuesday, by Monday or Tuesday? I don't know, but that's the trajectory that I'm looking at right now. Also, the MACD you can see is very positive. Stochastics at 96%. I would not be shorting. This is looking very good, even though I am hoping for a pullback for certain reasons. So numbers are, I lost it. Here we go. Quickly, as we go to a break, the Dow's up 1 at 13,472. The S&P is down 2.5 at 1469. The comp index is down 3. Gold is, the GLD is down 1.17 at 160.81. Crude oil is down 59, and we've got silver down, and we've got bonds. The TLT is down.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday at 877-927-6648. And we've got a bunch of callers already. Dan in Miami, how are you?
Hi, Basil. How you doing?
I'm very well, thank you.
I'd like to take a look at Apple. I was watching, I saw Dougie Katz on TV the other day. He was saying that chances are that Apple 545 will be a real outlier. I'm wondering if the market can go higher with Apple, get a little more heat, maybe.
That's a very good question. So you don't have a position. Are you looking to have a position, or are you just using Apple as a kind of a generator of ideas for the market?
Yeah, I'm heading along the QLD a little bit, so, I'm just watching both.
Okay. This is what I'm looking at. First of all, Doug Cass is really a fabulous analyst. He has made some fantastic calls, but sometimes he's very early and sometimes he's very late. So I always respect what he says, and I listen to it with a lot of respect.
Well, he's like everyone else. He does a, list of 12 things every year or so. Right. But one of the things that he does do, he does some very good fundamental analysis. I would say he's more a fundamental analyst than a technician. So sometimes in that particular instance, I know that when he gave what is called the generational buy signal, he was really early. The market actually kept going down for well over 1,000 points in the Dow. But it was a great call, nevertheless. So what I look at is I take that in, and then I say, all right,
That's all very well, but what do I see on the chart? And basically what I see is that there are a number of major movers going into late 2012 into early 2000, probably I would even say going into maybe December, but more getting a confidence of the call into January, that there are a lot of stocks that make what I have called a hat trick top. And I think that Apple, I don't see anything on the horizon that they could come up with at this particular point to really get the glamour that it had going into that major high. What was that? I think it was August or October, September. It was September. They went to a high of 705.07. Now I think the glamour is off, and it's show me, and they're going to have to keep bastardizing their products. They're going to have to keep doing other things until they come out with something maybe in the TV area that's just amazing. So I'm going to set that aside. I'm not an expert at all in the Apple area. I have a couple of Apple things, but other than that, I don't know much about the fundamentals. What I will say is that the chart is suggesting that if one was to get a short position, and it's at 520 right now. So he said, what did he say? 545? What did you say?
I think he said 545 would be an outlier on Apple.
It would be a bounce as an outlier. Is that correct?
Well, because it's now it's 620 now. So
now it's 520. No, now it's 520.
I mean 45 or things like that.
Okay, yeah. You see, the way I'm looking at it at this particular point, there's an arch formation at a peak E doji top in Apple in the monthly chart. I'm going to say to you that in the bigger picture, regardless of bounce, and there was a 656 low inside that September bar, and that to me is absolutely important. It's a silent signal that I look for. And, well, it's not so silent now because I just discussed it. But most importantly, the 9-period exponential moving average at 564, that line is turning down, and that's going to be strong resistance. So my suspicion is there's a sideways move that's going on with Apple. It's going to take a little time because there's been some real bad press. There's been some better results. So I suspect that Apple's in a trading range. The moment it closes on a Friday afternoon, on a weekly basis, below 495, it's at 520 right now, and the last significant low is 501.23. If it closes in the 490, anywhere in the 490s, the selling pressure is going to start to increase. I have a target for Apple looking out, and this is not near term, but this is looking out. The 200-period exponential moving average in the weekly chart comes in at 389. Well, 389 happens to be that whole area of congestion that it was in right through July of 2011 until the breakout back in January of 2012. That would be my target. In fact, I'm going to put this in if I don't ever lose it, like I've lost so many other things here on my charts. I'm putting that in, and I'm showing that 389 is the area that I would suspect it's going to try to target if it breaks into the 490s. That's only 100 points lower, but the fact is the downtrend, I believe, is in place, and that's very important. Counter trend bounces could bounce to maybe 446, 448. That's a possibility, but I think that Apple's just looking like a very tired stock. So did you have a question follow-up on that? Dan? Oh, okay, I'll be right back, folks. Dan and George.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. I believe I'm just going to give out one quick yell and say, Dan, are you there? I don't think Dan's gone, right? I think his connection went bad. He's gone. Okay, sorry, Dan. So, okay, basically what I'm saying is very limited upside for Apple. I suspect it's just in the process of making lower lows and lower highs. And I think a chunk of the work has been done for now. Now it's forming that pattern that I call the H goes to an M formation, and it can just hang around you, frustrating people for a while. And then suddenly there's the bad news, and whoosh, it goes right through the base. So watch that 490s area. So if you're talking about it being a market factor, it's absolutely a market factor because of its weighting. And talking about weighting online, we've got George in New York. Hi, George. How are you?
Basil, good morning. How are you today?
I'm very well. Actually, I would be a lot better if I wasn't frustrated in the fact that I had a short yesterday, which I was convinced was doing, it was exactly what I wanted, and then it had a sudden pop-up this morning, and I just know that by the end of the day, it's going to be below the price, and we got stopped out, small percentage, tiny percentage loss, but it's very frustrating because I think I've nailed the number of the shorts in technical terms. The implementation of the technique is absolutely imperative. I just do not like to make too wide a buy stop, and that to me is critical. So it means that I tighten things up, but when it works, it really works and makes up for everything. But I'm very strict in that regard. So you wanted to look at?
I'm looking today at Infy, INFY, and I'm frustrated as well.
Oh, this is one that you were going to start a position in.
Oh, very good, Basil. God bless you. Yes, correct. Back in October.
Yeah, but it did exactly what we were looking. I did
was I had sold naked puts going out to January 13 with a 45 strike because my margin of safety was 40.
Right.
So, of course, now, that's no problem. Those will expire worthless. But in the meantime, we have a company that had reported some good earnings. They signed some very large contracts.
You were looking for that.
Yes, correct. Absolutely.
And what I said to you is that I said, George, I think it is not yet done going down.
Correct.
And I drawn in an H pattern and said, I think there's this H pattern and how it retests the low. And it was doing absolutely nothing. Folks, this is a stock. I believe that when George spoke about it was in the mid-40s, maybe low 40s. And I said, it's pulling back. And they did the pattern that I talk about, that H goes to an M pattern. And a beautiful, when a rally fails at a peak C, it becomes a peak C minus. That's really negative. It invariably says you are going down and you're going to probably take out the previous low bar. And it's exactly what it did. It took out the 41.59 low of the 15th of November. INFI, Infosys Limited, ADS, and it comes back. And where does it go to? It goes to a trough E at 41.18, and then it starts at peak A, pulls back, goes a little higher to peak B, pulls back, and then yesterday was the tip-off that something was happening. I didn't see that. I wish I had. And something was happening because it went from 42.57 to 44.78. News comes out today, I guess, that the earnings were much better than expected, and pop. This is the rocket ship, the opposite of the crash. A rocket ship to 52.84. So other than the earnings, and it's really sometimes a gamble because the weekly chart was not looking very pretty at all. The monthly chart, as I said, I've even drawn it. I gave it as an example of the scallops on the way down, the ChapmanWave H pattern that goes to an M pattern. That was working very well. And then you can't do anything with news like this. For instance, let's just say yesterday you saw that the candle was really good. Well, at that point, you would be taking a gamble because if it failed, if in fact the news was really bad, we'd be looking at a stock that which closed at 43.95 yesterday. Mm-hmm. I'm pretty sure that if the news was bad, you'd be looking at a stock that would be somewhere around 41.80 or lower.
Yeah.
So that's a really big risk. It's 2 to 3 points on the downside. Mm-hmm. Instead, you've got 7 points, 17% on the other. That is so frustrating. But you know what? Mm-hmm. The risk of the 3 points to the downside, I don't think that I understand the frustration because you did your analysis and you said that you are starting to see improvement. I think those were your words.
Yes.
And I would only have said to you that if I knew that the earnings were coming out today and it acted quite well yesterday, mm-hmm. that I would have said to you, why don't you buy a couple of calls, 45 calls, and then you knew exactly what your risk was.
That's what I should have done. I should have built it as a synthetic position.
Correct.
And I chose just to take the naked puts, take the premium on that.
Right. So, the issue right now is mm-hmm. that it's in leg D in the weekly. I would never anticipate it. Looking at it yesterday, that today it would be in leg D in the weekly when leg C, peak C was at 49.99. Yesterday it was trading in the 43s. So, right. I mean, this is just one of those surprises, and you can't. Yeah, let me put it to you this way.
Mm-hmm.
If you had, I think I'd mentioned to you that you might want to take a little nibble on a starter position
Yes, you have an excellent memory. That's exactly what you told me.
That's what I said. And what would have happened, because I know that you are quite prepared to allow it to fluctuate with a small position. You don't worry about the stop as much as you would if it was a larger position. All it would have done was it have saved you, because it still would have had your put position. So, but basically it would have been a break-even trade. This way, yet you know exactly what what it costs you. Now you can rethink it, because basically it's in peak C, a leg C. I suspect that there's a pattern that you could see that if it was to pull back, it's at 51.45. And I know you don't really trade this way, but as a trade, you could buy it at 50.86, somewhere around there, with a stop a penny below the lower 50.14, and it should make leg D at 52.85 or higher. I don't know if you want that risk. I'm going to ask you to do this. Have a little patience. Think about the strategy you would use. I'm anticipating that next week I'm going to get a peak D in my S&P and Dow charts, and probably in the New York Stock Exchange. At that point, I think we're going to get a deeper pullback, because I'm looking at the home builders. I hope I have a chance to do it. I'm looking at the home builders. I think some of them are just short-term topping out here. I'm looking at the bank stocks. I think short-term they're topping out. So this will be just the next two peaks will be singular stocks, in isolated stocks within the sectors that are just good enough to push the indexes nominally high. That's what I'm thinking at this particular point, based on the work that I've done both in the ChapmanWave Stork Lake formation and with my time price match, etc. Now, if I'm correct, that means that bonds are about to have a bit of a rally, and that's going to be the real big test for me. Bonds, and do the munis also rally? If the bonds fail to do, if the TLT fails to get to 122 to 125, that area, I'd say 123.5 to 125, when the market eventually has just a nice breather, a good pullback. Then I'm going to say to myself, if they fail to do that, then I believe that in this quarter we're going to see money going from bonds to stocks. On the next pullback, I'll be looking to get different kinds of stocks on the long side. But I'm looking at more and more short stocks. So I'm saying to you that I would have the patience now. Feel confident that you are building up, and you are building up a really good strategy in your mind that essentially said, as always, I know that I have a lot of listeners who say, oh, George is on. I got to listen to George, because we have a couple of people that call TFNN to the various hosts, and people know that they have a good mindset for the techniques that they use, and you're one of those. So you knew that you were in the right area, but you missed the trade, and that was... But just remind me again, did you sold?
What I did was, when we were discussing it, I had taken premiums. I had sold puts. So actually, I had the obligation to own the stock if it dropped below 45 at expiration, which was coming up.
Yeah,
but
today.
Of course, now it's not going to hit that, and I do get the premium, which I'm satisfied with. I'm not going to say.
Right.
So now I'm saying to myself, I've seen the earnings report. I looked at it. I like what I see. They signed a large contract for $731 million. They completed their acquisition of another management consultant company. And with that, I'm saying to myself, well, now I'm not going to chase it, but I want to grab it on a nice sizable retracement.
I don't think this gap's going to be filled before it makes higher highs. In other words, I don't think it's going back to 44.76. I'm going to recommend that if this thing over the next 2 weeks comes back to between 48.44 and 47.80, and the 200-period moving average is at 45.66, and on the weekly it's at 50. I think it's going to go under 50, and at some point, right there, and the 9-period moving average on the monthly chart is at 46.69. The MACD's turning up, stochastic's turning up. I think, if I'm looking at this and I'm saying to myself, this is a sign of things to come, that InfoSystems is saying, hey, this could be a good stock going into the summer, and it could have a price tag of 56 to 59.
And also, just to bring to your attention, look at another favorite of mine, Cognizant, CTSH, which is a competitor to Infosys.
CTSH. CTSH,
you
right.
see the sector is starting to break out again.
Yes. Oh, there's that falling axe pattern in the monthly. Ha! George, I appreciate that you've brought something to our attention that is very, very pertinent. I like it very much. So CTSH is trading at 77.93,
and
also gapped up today.
I just want to leave you with one final note, though, because I look at things a little bit differently. So looking at a macro environment here, we just have to be leery of the late February, early March debt ceiling talks, because that, I think, could be a catalyst to bring the market down as well.
That's why I'm thinking that in the next week we get some kind of a top, and then we go into a trading range. That's kind of what I'm looking at.
Then we coincide. Wonderful.
Good. Thank you so much for calling. And boy, that was great. And I see that we've got Dan from Miami back. So thanks, George. Have a great weekend. Thanks for calling.
Be well. Have a great weekend. Thanks
and
again
a great
for
New
your
Year
help.
to you. Thank you. Hi, Dan. You're back. So, Dan, what I've done, I know that you heard most of it. What I was saying is that Apple should be making lower highs and lower lows. But right here, there's a phase that I'm looking at that says there could be a choppy motion between about 546 and that 500 area. But the moment it starts to break into the 490s, I think it starts heading quite a bit lower. But my question to you just before you got bumped off was, were you looking at this? What was the trading formation or trading pattern that you were looking at that you wanted to discuss?
Well, in terms of Apple, I had to go back and research it. I don't know if I got cut off or something. But what he did say is he seems to think that 450 would be like a reach for Apple on the low side. This is coming here is something about margins or... Anyways, that was my point. The daily and the weekly seems to be stochastics is what I follow a lot. It seems to be getting lower and lower, but
yes, it is.
I kind of agree with you. It's weak, but
it's weak, but there is. Right, but let me just also mention to you, try to use the MACD, the moving average convergence divergence, together with slow stochastic, because if you're looking at Apple, and the reason why I say there's still some internal strength, look at the fast moving average in the daily chart. It has not yet crossed negative. It's holding nicely. So it's saying, you know what? That H that goes to an M pattern in the what I call in the ChapmanWave dreaded H pattern, right. That is what you still got to consider. I think it has possibly one more bounce to the upside, and I wouldn't be surprised if next week sometime I get some kind of a signal that says, okay, now's the time that you can start thinking of the next chance of a short in Apple. So thank you for calling.
I thought I was obviously what? I don't know if I said 540, but I think Dougie said 450.
Okay, I thought it must be the downside.
For the clarity, that really helps.
Okay, good. And thank you so much for calling. And thanks for bringing that to my attention. Have a great weekend. Okay. Thank you, Dan. Dan in Miami. So, okay, folks, this is what I want you to do. Look at this. I wrote down a whole bunch of things. Just quickly, EUR-USD. Here we go. Wonderful move. I have to consider that this is a brand new leg B. So we've gone to A, and now this is B. I have to be very strict with my methodology. F/B. Why? Because it didn't break the previous major low in the weekly chart, in the daily chart. So this could, in fact, be just part of a cup form. It doesn't look like it, but it really is part of a cup formation. But I'm going with the same notation, ChapmanWave articulation of a leg as the daily in the Dow and the daily in the S&P and the NYA. So I'm going to follow this up because we've got in the weekly chart, we actually now have leg D bumping right against the 200-period moving average. I'd like to talk about that as part of the ChapmanWave methodology. I'll be right back. Basil Chapman, the Dow's up 0.30, S&P's down 2.5. Be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. This is the pattern that I've spoken about in great detail. I call it the ChapmanWave stalk leg phenomenon. We've been through it in the 8-9 years I've been here. We've been through it almost every year. We go through it. Certainly didn't go through it. It was on the way down, a stalk leg, and that says every single time there's a decline in the market, buyers step up to the plate. If you are shorting, it is frustrating because the shorts don't garner downside momentum because the buying just keeps filtering to the upside. And there are selective stocks that keep pushing the market higher. So I was talking about the EUR USD, and the EUR USD is in the 120-minute chart at a long-legged doji at peak C. If it doesn't make a new recovery high, I expect the peak D to come above, and it should be the expansion of 261.8. It should go to 1.3384, that area right there. The daily chart is only in leg B, and they could pull back and start a brand new move. So sometime towards late next week, I would expect some kind of a top. The USD, that's the currency pair, the euro US dollar, EU USD JPY. Look at this. unbelievable. At 89.20, it's walking the 9-period. We learn about these techniques. I keep talking about them. Look at that 9-period moving average. It's unbelievable. Look at the weekly chart. Look at that breakout in the ChapmanWave cup and ladle. Look at the 120-minute chart. Well, I haven't updated it. There was a parallel G to C. What it happens to go to D. Unbelievable how many times it happens. So peak D right, peak D or maybe leg D right here. So it's getting a little toppy. It could be pulling back in the next, by maybe Sunday night, Monday, it could be pulling back. But it's a phenomenal move, tremendous power to the upside. I was asked about Facebook. You know, Facebook is the face of this particular new buying mode. This is Facebook is a new leg B up, making a possible doji today. Stochastics at 94%. The MACD is very good. This is going to go higher. And the weekly chart is in leg D. It needs to clear the resistance at 33.45. The height so far is 31.96. So we're going to be watching this real closely. In terms of KCH, I was asked about coffee. KCH 13. By Another Day in Paradise. That's the nickname. Yes, coffee is coming off the bottom here. Very important. Thanks for pointing it out. I was about to look at it the other day, but I can never remember the symbol. 141.25 is the low on the 12th, on the 31st of December. It's made a peak 8. If coffee is able to get above, this is the contract, the March contract, above 151.90. If it can go above 159, 195. The next level would be 155.15, the high of the 7th of December. That's number one. Monthly is just terrible. The weekly is horrible, but about to, there's this long-legged doji. This is a great example of how turnarounds can occur. If the coffee contract on a weekly basis is able to push away without coming back into the body of this candle, but by Friday week, it's already testing the levels we're talking about, the 153 to 155 area. That'll be really important, number one. Number two is the support says that even if it was to go below 141.25, it's going to come back and test the middle of the candle between 146 and 147.35. So the body of this candle and the 9-period moving average are absolutely key. The stochastics trying to turn around, the on-balance volume weekly has turned around, and the monthly MACD is making a positive divergence, but it needs to cross positive. I would say that if coffee in the next 5 to 7 trading days is able to close above 158, that might be a lot bit high, but 158, it's at 157.75. That'll be the first time it's able to turn around. It'll be the first good sign that you can see in coffee for quite a while. Folks, Basil Chapman, opening call is my service. Go to the front page, check it out. All of the charts that I talk about, I use that particular waveform. I show it in great detail, and we have positions long and short, $1 stocks and $350 stocks. I'll be back on Monday. Have a great weekend. Stay tuned for all the great shows.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into